right, welcome back to another edition of Diamond's Edge. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week, I'm going to take a look at interest rates, both on their own and then relative to stocks, and why I need to pay attention this week for a potential big reversal, in addition to what we'll likely see from Federal Reserve Chairman Jerome Powell as he testifies this week in Congress. All right, so let's jump into it. Now, when I look at the long-term trend of interest rates, okay, this is back in 2020, you can see on this chart here, okay, and obviously from the low, what has interest rates been in? They've been in a long-term uptrend. Now, we know here in 2020, late 2021, and pretty much all of 2022, stocks did not do well in this environment. The Federal Reserve was raising rates higher than most people thought. We know what happened. We had this big rally in interest rates. Stocks were incredibly volatile. A lot of big crashes in some of these technology stocks. And then it started to top out here in 2023. And then obviously last year around October, we saw another top and drop, and that helped stocks. Okay, but now let's take a look at what has happened so far this year. And I want you to focus on a rare technical signal that a lot of analysts out there don't really look for. Now, this is the relative strength index below. Most people know about divergence when you see the RSI pop up or not make a higher high with price. Like right here, this would be negative divergence, right? Because price made a new high and the RSI is kind of sloping down. Okay. What's an even stronger signal is what's known as a positive or negative RSI reversal. And it's a little bit different. You have to guide your eye a little bit. It takes a little bit of time to get used to, but when you do find them, they tend to be very powerful. And what this means is when a lower low, so these 2 points, and let me just track this for you. It'll be a little bit easier for you I'll be able to show you. Okay, so this is a low in interest rates, back in April of 2023. Okay. This is the same low on the RSI. Now look, fast forward to late last year, early this year, and you can see how price from these 2 points, this is sloping up while the RSI is sloping down. Okay, the price gives you the signal. So the RSI has essentially overextended itself, but price is saying, hey, wait a minute, this is wrong. Okay, so positive RSI reversal means that this is in a positive uptrend. And since the RSI has gone below this low while price hasn't, it means that we're likely to see a move higher. And that's exactly what we saw. You can see from here, interest rates have gone higher. So does this mean that we're going to see a move, like back in 2022, where interest rates skyrocket higher? Maybe, maybe not. But what it does tell me is that interest rates, the uptrend remains, and we're likely to see interest rates continue to push higher. We saw data last week come out that, inflation is not falling. It's sticky, if you will, and we'll likely see the similar comments from Federal Reserve Jerome Powell that, look, this is not going to be a situation where we're going to start cutting interest rates. And that has been my view since the beginning of this year, that the majority of people out there, the majority of analysts, the consensus, if you will, is that we're going to see rates come down and they're going to start cutting interest rates. And I just don't see it as a possibility. I don't see it as a probability. It's always a possibility, but not a high probability. And price is confirming this. Okay, so that's what I'm looking for here. This is a weekly chart, which means this signal is quite strong. Okay, so we can start to see interest rates guide higher here, or start to rally here. And so now let's take a look at that relative to stocks. Okay. So the blue here is the S&P 500. The black is once again this 10-year interest rate. Now look what happens. Okay, we can go back to 2022, and you can see here that when interest rates bottom, and yes, there is a lag essentially where interest rates and stocks can rally together. Okay, but look what happens when interest rates really start to skyrocket. Stocks start to take notice and they drop. Okay, and we can see even smaller examples here. This is back in late 2022. Again, a spike in interest rates, S&P drop. A spike in interest rates, S&P drop. And now look here again. You can see it where interest rates, they'll guide higher and stocks can rally along with it. But, again, once they really start to take off, stocks didn't like it. This is back in 2020, 2023 in summertime where we saw this really big correction in the S&P 500. And why was that? Again, interest rates took off. And when they topped, as soon as interest rates topped, stocks bottomed. That makes sense, okay? Now we can fast forward to this year and look what we have here, okay? So again, interest rates bottomed here in December of 2023, and we had this little dip in February, okay? But it's making higher highs, it's making higher lows. Interest rates are still in an uptrend. So from what I can tell, I would be very cautious about getting extremely aggressive here in stocks, because if interest rates spike higher, we've seen what that does to the stock market. So it's something to, from a longer term perspective, from a correlation perspective, to be aware of. I would also, we'll see what Jerome Powell has to say. And then obviously we're going to get jobs number at the end of this week, plus more inflation numbers. So, the price action right now, the price signals are telling me to be very cautious about a possible repeat of what we've seen over the last 2 years, call it, where interest rates tend to spike up, stocks start to take notice, and at a minimum, you get a small correction. Okay, so that's what I'm focused on this week in interest rates relative to stocks. And this is something I'm going to be tracking for the rest of the year, obviously. But going back to this chart, this is a very strong signal to me that interest rates are going to keep rising. So keep an eye on that, and I'll see you next week. Thank you.